Get your free copy of the complete tutorial at www.teachucomp.com/free. In the last lesson, we learned that T accounts are important to track economic events within a business. We also learned that those accounts are the fundamental building blocks of accounting. However, transactions are typically recorded in chronological order in journals before they are transferred into accounts. This act is called journalizing. The entire record of journal entries is called a general journal or a general ledger. The journal does three important things. It shows the complete effect of a transaction, it provides a chronological order of transactions, and it helps to prevent errors by showing each transaction by itself, therefore making it easier to locate specific funds. Typically, most companies keep journal entries of economic events within the business. Some use systems created by hand, but most use accounting programs such as Sage 50, Peachtree, or QuickBooks. Whichever system a business uses, it's important to understand journalizing and the process behind it so that those programs or systems make sense to the user. Also, knowing where to post the journal entry is important. Understanding the different options for accounts is crucial to a successful journal entry. Typically, a company will have a chart of accounts where they list the accounts that that company uses. Then later, they may create new accounts depending on their needs. It is important that the correct economic activity is recorded in the correct amount. Some important accounts are asset accounts, such as cash, accounts receivable, supplies, prepaid insurance, and equipment. Liability accounts, such as notes payable, accounts payable, interest payable, and unearned service revenue. Stockholders' equity accounts, such as common stock, retained earnings and dividends, service revenue for revenue accounts, and expense accounts, such as salaries expense, supplies expense, rent, insurance, interest, and depreciation. Let's take a look at an example of a journal entry. In September of 2012, XYZ Inc. took out a loan in order to purchase supplies. This would have an effect on a number of accounts. The first accounts affected are liabilities and assets, or more specifically, accounts payable and cash. Then, cash and supplies would be affected as well. So the entire journal entry would look like this. Cash has been debited $500 and accounts payable has been credited $500. This will reflect the $500 loan. Next, supplies were purchased with the cash, so supplies were debited $500 and cash was credited $500. This reflects the purchase of supplies for $500 with cash. Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.